G'day, this is Sydney Options Trader looking at the halfway back trading method. Just to summarise, basically the halfway back trading method gives us some really good clues on what the bias is of the current trends, who's in charge, the bulls or the bears, and it also enables us to set up a concrete trading plan with clear profit targets and clear stop losses. So basically they're the two things that the halfway back trading method serves us with. Now tonight we're going to be looking at the FXE, which is the Euro futures contract, and you will note here that this big downtrend has been broken right there. The 618 line has been broken, so the trend has failed and the negative 23 targets are now no longer valid because this 618 is broken. So we delete that line, and you'll note that we have come out of a nice 50% retracement that has hit its negative 23 target. Now the question is, where's it going from here? Is it going to have a pullback, or is it going to keep pushing higher? Now if it was going to do a big pullback on that whole trend, then it would come back down to this level before heading higher. However, if it was going to continue on a series of measured moves, then we would take this low here, which was the 50% pullback, we'd go to the new high, and we would have some new targets. These new targets being up here at the new 23%. Now that's a good clue of where it could go. If we pull in on the smaller time frame, the hourly, there's a few things going on there where we can see that this short-term trend that's down was broken. The 618 line was broken, which does give us a bullish bias, which has been bought, and at this stage you would have to say that even though the battle zone is right here, and what I mean by battle zone is the area between the current trend, which if it's the long trend, and then that 50% buy point, and the opposing short is those two 618 lines. That's what we're talking about with the battle zone. Now if we go back to that higher time frame, we do have to have a pullback all the way down to this area here to get to that second measured move. So we had this first measured move that went up, 50% buy, hit our negative 23%, Now if it's going to head into a series of measured moves, we actually need to have a pullback all the way down here before it hits its negative 23%. What if we go straight there? Well, the potential is that maybe there's an extension, and this is the halfway back from the extension. So if we just have a look at this daily, have a look, say at this point here, you'll find that that corresponds with what could be a buy signal on some programs. Now if that's the case, we come up with a decent target of 143. So in those three fib lines, we actually have quite an interesting trade plan. And if we zoom in on that, and look at the hourly, then you'll know that we've got a good chance of hitting our target if we can clear this short 618. The stop would be here at about 138. Now we're sort of halfway between there, so the risk reward isn't all that good heading to our first target. But if we were to combine what we think is a longer term target with a shorter term stop, then we've got quite an attractive risk reward. We're risking maybe a point in an attempt to gain 4 points. So being options traders, if we head to just a chart of the equivalent FXE, I have drawn up the equivalent targets there where our shorter term long and our longer term long trend means that we have basically a 137.75 stop with a 143.02 target. Now you're not seeing that full pullback there because obviously the FXE only trades in market hours, so get a little clearer picture in the hourlies when you see the out of hours times. But obviously that's why we look for our signals on the price action on the futures, because the pullback was actually in that time there. So that's why I've just looked for equivalent levels on the price action, but not looking for the halfway backs. So if we were to take those levels as our trade plan, 137.75 as the stop and 143.02 as the target, I've come up with this particular option strategy: 137.75, 143.02. Basically we're currently at 138.78. We've created for ourselves a downside risk, or if it hit there tomorrow we would lose $131. That's managed risk. Max risk would be $896 at expiry, but we can set our stops so that we will basically get out at $132 there. Now there are some risks with the stops because it could go below there after hours, so we'd have to have some ways of getting around that. But in the main, if we set our stops there, a contingent order at 137.75, Our managed risk would be $131. And if we hit our target tomorrow, then our profit would be $553. Now, at expiry, assuming we don't gap down and head towards our max risk area, the interesting thing is down here, the way we've shaped this strategy, this option strategy, is that the longer it takes in this trade, if it fluffs around in between here, this white line is heading towards the red line, so time decay is on our side. Similarly, the longer the trend takes to actually get to its target, this time decay is once again on our side. So at expiry, if it hit our stop out point, we'd actually only lose $17, whereas at expiry we'd make $705. Interesting thing is that if we stay above this area here, we would make $104 profit, even if the price goes nowhere in that time. So we have this sort of risk reward of 130 versus 550, so that's almost 400% return. However, the max risk on the max return is about 1-to-1. You can see the orders down here. How I shaped that option strategies for another time, but hopefully you can see the strength of the halfway back trading method there in giving us basically a way to determine who's in control, bears or bulls, and then creating an attractive risk reward trading plan. Talk to you next time.